Okay, check mic 2 1 2. Let's see how many of you are in the live chat. Just let me know if the sound quality is good enough, and we will start just in a couple of minutes. Okay, cool then. So let's start. Greetings everyone. I'm glad to see you all today. My name is Dmitry. I'm the portfolio manager trader, and together with Bitsgap, we are working on the automated trading implementation so that you can have more tools at your disposal to maximize your returns and to secure your profits in case of the falling market. So yeah, let me just full page. Yeah, this one. So today specifically I want to focus on the topics of when is the best time to launch automated bots, what is the primary difference between the SBot strategy that we have and the classic bot strategy. So when is basically it's the best time to launch the SBot compared with the classic bot. So we will also cover what are the tools that you can use, like the backtesting, to generate on-trade ideas and to compare different trading setups with one another, with other cryptocurrencies or within a single cryptocurrency. And also how to diversify your portfolio, because diversification is not just about having a variety of cryptocurrencies in your portfolio. It has become a bit more complex as the market matures. So now we are even able to diversify our portfolio with different strategies. So you can, for example, launch two bots on one crypto, the one for the for certain goals, and another one is for completely another goal, but still working on one cryptocurrency, diversifying your portfolio. So let's see why automation outstrips an ordinary manual trading. So in manual trading, basically what you do is that you look at the chart, you conduct a complex technical analysis, you conduct the fundamental analysis as well to, okay, so volume is a bit low, let me make adjustments. Okay, so once okay, so what about now? Let me know if the sound quality now is better. Should be fine now. And I will actually speak up to improve the quality. So yeah, let's continue. So once again, in manual trading, basically what you do is you look at the chart, you conduct the technical and fundamental analysis to figure out when is the best time to buy or sell and what is the best price to buy and sell. So for example, on this chart you have, I guess that was, yeah, that's actually Bitcoin trading to USDT. So imagine that you, yeah, well, this one is right. Imagine that you buy the price of 26,000, one Bitcoin, all right? And then the price appreciates and you make a new technical and fundamental analysis, and you now have some doubts regardless the continuation of the rally. So you decided that it makes more sense to exit the market now to lock in the 3,500 return. All right. But what happens next is that actually the price continues the upside momentum. And if you would have closed your position right here at the top, of course, this would bring you bigger returns. This is actually a missed opportunity of $9,000 in total. So the lesson here is that regardless of your technical and fundamental analysis, the only thing that you can actually predict is the price direction, all right? But you can never predict the exact price the crypto will reach tomorrow, the day after tomorrow. So that's the point. And this is where automation steps in, because in automation, the algorithm is fully unbiased and it is indifferent towards the price, actually, because it just buys low and sells high. And you see, these are all micro trades within this period of time when the Bitcoin had an upside momentum. So what you do here is that you end up with micro trades that generate returns for you on a daily basis, like 24/7, fully automated. So you don't have to stay in front of the computer like the whole day. You just have the algorithm to do the job for you. It just uses your crypto to sell it later at a higher price. Then it takes this cash out from the market to buy this crypto at a lower price, so that later it sells it at a higher price again. So this can be an everlasting process of the bot trading on your behalf as soon as the price stays within the trading range that you defined in the strategy. So now we steadily go to the automated trading strategies and some statistical tools that we have. So as of today, as we added new features like the daily bot profit that you can monitor and some other key metrics, it's now become even more effective to measure your success and to compare your strategies with one another. So let's go to the platform. All you have to do here is like you log in and then you go to the bot section. You have here the chart, and on the chart you can conduct your technical analysis. So all the tools are here at your disposal. On the right side you have the dashboard layout to make a trade decision basically. So this is where you configure the bot. Below you have a list of your all active trades right now. So these are all my active bots trading right now. Well, actually, it's not entirely true, because you see those are active where you see the status active. Some are out of the range for some reason right now, and we will check this later. But yeah, still here is the full in-depth visualization of what are your current trades, active or out of the range, or maybe they are having some other activities like the pump protection, which will also be explained today. So all information is here, like the investment change. That's the key metric that you monitor. That's the only metric that worries you the most, because this is exactly how much you gained to your investment. All right, so the bot profit is going to be always in the green zone because it just indifferent towards the market trend. So when the price is in the uptrend, on the sideways, or even if the price is falling, the bot is always able to buy low and sell high. So you see, for example, over here it seems like the price is in the sideways market formation. So in this sideways market formation, it is able to spot this, like, I mean, not to spot, but to seize these market swings. As you see, candles swing downwards and then upwards. So there are always these opportunities regardless of the market direction. On the uptrend, of course, you see the price not just strictly rises. Of course, there are ups and downs on its way to new higher highs. So that's why you see red candles here as well. So these are, in this case, perfect opportunities for the bot to buy at a lower price to then participate in the rally further. Okay, so that's the idea, that the bot always extracts these profits from the market as it buys low and sells high. So here is basically the mechanism. That's the grid strategy. You have the highest sell price, the lowest buy price. This is your basically trading range. And within this trading range, you have other grid levels. So these are, in other words, are your limit buy and limit sell orders. And the the bot system that we use at Bitsgap, it equally distributes your investment per each of this level. So you never end up buying or selling crypto at only one price. The average price you buy the crypto and sell the crypto, it always changes because it always buys at a lower price and sells at a higher price. So for example, in this example, imagine the price goes higher and triggers this sell limit order. So this means that the system will sell Bitcoin at that price. So it takes out 11,500, and out of this 11,500, a portion like 11,250 is used to create a new buy limit order. Whereas the difference in this case is the profit, which goes directly to your balance, which you can actually use for other purposes, like for manual trading, or maybe to use this money to launch new automated bots on other cryptocurrencies. So it's fully up to you. And there are four main market phases, depending on which your automated strategy varies. So we have the accumulation phase, and after this accumulation phase, we see that the market is advancing, so we see a massive rally. Then, of course, at some point of time in the future, the price will stabilize and the sellers and buyers are going to fight for the equilibrium. So those who made their returns on this rally, they're going to fix returns at some point of time in the future, right? So this creates this distribution phase. It can be the case that after the distribution, a new rally can emerge, but it also can be the case that after the distribution, there won't be enough of the buying power to force the market going higher. And that can be the case that the market enters the decline. So depending on the market phase, there are different strategies. So for the sideways market, and for the sideways market is meant the accumulation period and the distribution period. So these can be long periods. It can be like weeks, it can be month. So that's why we are interested in these long-term phases, because you just launch the bot for like several weeks or even month, and it just does the job on your behalf. Okay. Of course, it can also be the case that even during the market rally, you can spot these accumulation phases. So in this case, this can last like a couple of days, sometimes can be just a week. But still, even on the rally, you can spot these opportunities to launch the SBot strategy. So why I said SBot, because SBot, that's the one we have over here. As you see, the strategy, we have the classic and the SBot. So, like, long story short, the SBot is optimal for the periods of accumulation and distribution, whereas the classic bot is optimal for the advancing market phase, because that's the best phase for the classic bot to generate returns. And if you would have if you would compare the results of the SBot launched on this advancing market phase with the classic bot, you would find out that the classic bot significantly outstrips the SBot. So that's why when you expect the market to enter the advancing mode, to enter the rally, then stick with the classic bot. Whereas when you expect the market to enter the accumulation phase or the distribution phase, then the best choice for you is the SBot in this case. So here's the exact example why you should launch SBot on the sideways market. So that's the basic attention token trading to USDT. And notice that this is the backtest result for the same exact period for the SBot and the classic. You see, that's from the 24th of December until the 5th of January. Okay, you see, both have the same date ranges. And notice that the SBot managed to make 3% during this period of time, whereas the classic bot has managed to make only 2%. So that's the visualized proof for you that the SBot brings you more returns than the classic bot on the sideways market formation. That's due to the uh, investment distribution structure. It's basically due to the fact that in the classic bot, it always buys and sells the same amount of crypto. So for the classic bot, when the price is rising, then the price per one coin increases, right? So in order to buy the same amount as before, let's say 10 coins, this would require you to spend more. And this is what the classic bot is going to do. It's going to spend more to buy these 10 coins. So this means that your investment is now bigger. Whereas in the SBot strategies, okay, so that's the classic. Let's name it CL. But for the SBot, if the market goes higher, SBot, for the SBot, it never sticks to the same amount of coins to buy or sell. Instead, it just spends the same investment per each grid level. So it can be that at this point it buys only 7 coins. When the price goes even higher, it will in this case buy even fewer coins, like 5 coins. That's why the investment spent on each level is the same, alright? So of course then the price appreciates, then this means that having the same investment, you are not able to buy 10 coins as before. Now you can only buy, as here you see, 5 coins. So that's why the classic bot, when the price increases, it basically increases your exposure to the volatility of the base currency, because it buys more of the coins as the price goes higher compared with the SBot. Whereas the SBot, it just makes sure that it spends the same investment per each grid level. So that's why, once again, for the SBot, what we are looking for is the period of accumulation when the price swings within this trading range of the horizontal support and horizontal resistance lines. This is the the perfect market phase for the SBot, because it just spends the same investment. So even if the price is having its short-term fall, then in this case your risk exposure remains moderate the same. Okay, so what you have to understand here is, once you selected the strategy you want to stick to, so for example you expect the market to rally. Okay, it really takes time for me to get rid of these drawings. Maybe I just use, yeah, well, remove drawings finally. So let's assume that from that point you expect the market to rally significantly. So that means that you now know that the classic bot is better on the rising market, so you will stick with the classic bot. So now for you is the time to decide what is the investment you want to allocate to this strategy. So here you set the total investment, all right? And notice that here you have this simple tool where by dragging the line to the left side or to the right side, you increase or decrease the investment. Okay, so you see this is exactly 821 USD dollars, and the exact distribution is 100 inch coins and this amount of bitcoins. So we need a certain amount of the base currency in order to plot all of these sell limit orders, right? Because in order to sell something, you must possess it. That's why as you launch the bot, at the time you launch it, like, you must have a certain amount of base currencies at your disposal so that the system plots these sell limit orders. And of course, just in case if the price falls within the trading range that you set, then you have the Bitcoin to buy the base currency, in this case that's inch, as the price falls. Okay, so that's the thing you have to take into account, is that it always needs some base currency to launch the bot and the quote currency to launch the bot. So another crucial thing to take into account is the trading range itself. So you have this lower price and upper price, as I already explained to you. So this is your top point and that's your bottom point. So let's assume that you want to trade just within this range where you have your lower price located exactly at the point where you have your support line, this local support line, and the upper price, which in this case determines the, let's say, the highest price this crypto trade. Or you can put it lower, let's say to that point where you've noticed that the price has like more resistance cases. Okay, so here's the resistance, here the price resistance, so it's pretty much like your upper price can be somewhere in that area. So the wider is your sales zone, the more base currency is required. So for example, if I drag my upper price higher, like to that point, notice that now I have 92 inches. If I make this zone narrow, then you see it reduces the amount of base currency required. Same applies to the buy zone. If you decrease the buy zone, let's say to that point, like fewer bitcoins is required. Okay, if you increase, then you see concretely like strictly another allocation. So you set the trading range, you set the investment, and let's stick with the 820 USD. Now you want to decide what is the amount of grid levels that you want to plot. So that's, here you see that's the guideline for you. We've passed the first one, which was basically a random one for me. That's just 1 inch BTC. But let's assume that we decide to trade this coin. So this means that we passed the first page where you select the crypto. Now we set also the trading range. So all done here. And now is the time to select the grid levels amount. So as a rule of thumb, if you have more than 60 grid levels, see now I have 48, but if you want to have more than 60 up to the possible maximum of 180, then this is what I call the high frequency trading setup, because having more than 60 means that your frequency rate of trading significantly increases, but the grid profit diminishes. But in any case, the fact that now the frequency is increased, it offsets the fact that the grid profit is decreased. Why is that? So you see, if you, let's say, now I have 20 grid levels, and the profit per grid level is 1%. Okay, it's also known as the grid step. That's basically the space between your grid levels. All right. Of course, if you increase, let's say, to 100 grid levels, now the profit per grid level significantly diminishes. But since you have so many grid levels now within this trading range, this amount, it offsets the diminished profit that you get per grid level. So what you end up with is with a pretty much the same results, but it just makes more sense to launch bots with the amount of grid levels above 60 when you see that the crypto is not volatile enough. So what I mean by that? If the crypto swings daily, let's say it goes up and then next day down, and let's say it goes up by 16% and then next day down by 11%, then this is a pretty much volatile crypto. And for this one, just stick with the grid amount of below 60. So for this one, it's enough to have, well, 30 grid levels. But in case if you see that the crypto is not that volatile, so maybe let's actually find an example. Maybe let's go to hobby, and let's see, we have MXC coin, MXC USDT, and let's see how it swings daily. So you see, like intraday, what is the fourth? Yeah, well, maybe not the best example, but still, it's pretty obvious that here volatility is less than the one we had before, like in the previous example. So that means for when you see the coin like this, and you see that the intraday volatility is around like 6% or something, then it would make more sense to stick with the amount of grid levels above 60. So 70 or 80, this would be enough, because we just want the price to seize as many grid levels as possible. And of course, when the volatility is low, then having more grid levels makes more sense, because by that you basically squeeze your trading range. You squeeze your grid levels closer to each other, like you make your trading range somewhat tighter. So your grid levels now closely located to each other, and by that you ensure that the price will most likely seize the vast majority of your grid levels. Whereas if you would on this coin set only, let's say, 10 grid levels, so notice that the gap is so big now, then you basically risk yourself with, I mean, you risk that the price will not trigger some of the key grid levels, because we have only few grid levels, so that's why we want as many of them to be triggered. And if two of them are not triggered, like here, you see, let's assume the price will follow the downside momentum and then it will revert back, but it did not reach these two lowest buy orders, then this is a disappointing case for you. Instead, if you would have 80 grid levels, well, in this case, at least it would have triggered around 60, like 50% of your buy limit orders. Okay, so that's the point. For low volatility cryptos, make sure you have more than 60 grid levels. For severely volatile cryptocurrencies, you can have 20, 30, so below 60 is enough. Okay, so that's the point. With investment, that's the fourth step. We decided to stick with what? I remember 820, right? So yeah, here we go. Let's actually reduce. No, let's remove drawings. So yeah, here we go. So yeah, that's basically it. The trading range, the investment that we set. So yeah, by the way, I have all of this. I already have this coin trading, so that's why I need to stick with another crypto. Let's in this case use FTM, and let's just randomly set the upper, lower. Yeah, pretty much the same investment. Yeah, so notice that you might have this notification which notifies you that the balance is not enough. So you either have to adjust the grid quantity to stick with the same investment, or you must increase your investment. So you see here I have 179, and to set all of these 179 grid levels, it's not enough to have this amount of investment. So that's why I will reduce. And now with this same investment value, I can have 159 instead of 179. Okay, so that's the point here. If I, let's say, set 0.1, which is 368 USD, you see it's no longer enough to launch 159 grid levels. So once again, adjust, and now with 72, it is possible to launch this bot. So once you set all of the metrics that were required, like the lower price, upper price, you set the grid amount. You can also set the stop loss, which is basically the prerequisite of your success, just to make sure that you have your risk under control. And notice that it automatically plots the stop loss below the trading range, but you can actually drag the line lower. So let's say if the price falls and fails to revert, but instead continues to fall further, then at least our risk is under control. So that's the point down to which is the maximum that we will lose. Because if you don't set the stop loss, then you risk yourself having even bigger losses, because the price can fall even further. All right, so that's the basic risk management principle here. Make sure that you use the stop loss all the time. Take profit is the one that you use if you want to secure your returns. So let's say as soon as the price reaches the investment change of, let's say, 24%, then it automatically closes the bot by selling all of the base currency that you had at the time when the take profit requirement was fulfilled. So for example, you see for 1 inch BTC, my investment change is 23.87. So if I set the take profit here to 24%, as soon as it reaches 24, it will automatically close the bot. Okay. But you can always change this. You can switch off the take profit, or you can switch it on later. That's clearly something up to you. Same applies to the stop loss. And by the way, you can plot the stop loss even within the trading range. Previously, it was not possible. Like 2 months ago, it was not possible. It was only possible to plot the stop loss below the trading range. But now you have this opportunity to plot it anywhere below the current market price. Okay, so for example, this one I have, and I launched it 6 days ago. That's actually was exactly at the day then we had the previous webcast. So at that time, like back at that time, the stop loss was around this area over here. It was below the support line. But now as the price made a new higher high and it made a significant rally over here, then my stop loss can be in this area. So I can plot it below this support line, which is a newly established support line. So it would make more sense to have stop loss here instead of having it here. Because if it breaks this support line over here, most likely it will fall back to that point. So why would I bear this loss when I can have my stop loss right over here? Just to, in this case, this will secure my returns actually. So you might be wondering why my stop loss and basically why my trading range is now here, even though initially it was somewhere around this area. So initially my trading range was over here. So the reason why it's now trading above is because I have my trailing up on. So this trailing up, which is over here, it basically allows the bot to automatically follow the market rally if the price goes higher. So I even have this in presentation, I guess. Yeah, so here it is, present. So let's assume that this was your initial trading range, which is defined by the upper limit and lower limit prices. And what happens next is that the price breaks the upper limit over here and establishes new higher high. So when you have the trailing up instrument on, then your trading range will automatically follow the market rally and it will be adjusted accordingly. So now your upper limit price is somewhere around this new higher high. And of course your lower limit price will also move higher. What happens if the price establishes even a higher high, like a new one over here? So the trading range will follow in this case. Though if the price falls from that point and breaches the lower limit price, then in this case the trading range will not follow the downfall. And this is the area where the bot is unable to trade anymore. Because what we remember is that the bot trades only when the price stays within the trading range. Of course, if the price reverts back to the trading range, then here the bot will continue trading. New higher high, not a problem, the price will follow, and now your trading range is in this area. So that's the idea of the trailing up instrument, which is right over here, is that whenever the price goes higher, the trading range follows it. And that's a cool thing because this basically means that it follows the market 24/7. So when you are unable to monitor the market, then in case if at that moment and you are unable to see what is the price action on the market, let's say you are on a plane or somewhere else, and the Bitcoin goes higher, like it goes higher by 5k, like 10k. So during this period, if you would have your trading up on your strategy, then the trading range would automatically follow the rally. So this would ensure that the bot stays in market and it will continue trading on your behalf. So this is what you can use to maximize your returns. So basically by letting the bot to follow the market rally, you maximize the returns because the value of the base currency keeps appreciating and you provide the bot with now more opportunities to trade on this rally. So that's the idea. And of course, the big question is, what about the stop loss? So what if I have both my stop loss and trading instruments like here, both switched on together? So let's remove these drawings. So in this case, trading range, the price is trading, and let's assume that your stop loss was over here initially. So now as the price goes higher, so does your trading range, and the stop loss will follow the trading. So it goes together with the lower and upper prices. It just goes higher with the trading range, the stop loss. So that's why for my active bot here, 1-inch trading to Bitcoin, initially my stop loss was over here, but as the price made new higher high, my trading range is now over here in this area, trading higher, and my stop loss was following the trading range, you see. But the cool thing is that I can always change the position of the stop loss. So now it makes sense to have my stop loss over here to secure my returns. So that's the way of how you can manage your active bots, like I just did. Okay. So another one that we launched 3 weeks ago, you see, completely different story. Initially, my trading range was defined by, where is that? I forgot. Yeah, so it was 492.6619. So 6619. So initially, you see my trading, like the upper price was right here, and the lower price was somewhere around this area. Okay, so that was my initial trading range. So as even for this strategy, I have my trading up on, then notice that it has managed to follow the rally, and that's why my trading range is now over here, over this area. And of course, this requires me to set my stop loss somewhere in another area. So it no longer makes sense for me to have my stop loss over here where it was initially set. Now it makes sense to put it below the current support line, which is somewhere around, okay, for some reason this system is lagging. So yeah, so it makes sense to, so why is that happening? I don't know. Let's refresh the page and let's see what happens. Yeah, so now you can drag the line. So let's say I want my stop loss to be around this area, and this is something that you can do just by dragging the line. What else you can do is that you can manually type in the exact price where you want your stop loss to be. So just go here and change the stop loss value over here. Okay, so that's the point. So the cool thing about automation at Bitsgap is that you have the track record displayed on the chart. So I see exactly where it purchased and sold the coin. So all these green levels, oh sorry, green circles, they represent executed buy orders, whereas red circles, they represent sell orders executed by the bot. So I know exactly where did it buy and where did it sell. And this is a cool thing because like it visually, it's pretty much obvious that it has managed to make quite a decent number of trades during this period of just 21 days. So you see 2,400 transactions in total during this period. So that's what we call a high frequency trading, because imagine manually you would try to keep up with the automation. It would be just impossible for you to make 2,400 trades manually within this period of time. And it's basically not the record. Sometimes you see here, ING trading to Bitcoin. I actually have 5,000 trades in total for the same period of 21 days. Right now you see that the status is trading, which means that the price right now, and we are actually very lucky to spot this case right now. Now you see that the price has breached the upper limit price, and that's why I have the trading status, because the trading range started to follow the market rally. So if you zoom in, then you will see that now the trading range is moving together with the rising price. Okay, I have this status, which is a range, which means that the bot is no longer trading, and here's the reason. So you see, back 2 months ago when I launched this bot, I did not set the trailing up. You see, it's switched off. So due to this, it did not follow the market rally, which happened over here. You see, I got stuck with my performance at this level, and this is the opportunity that I missed. You see how significantly the market rallied from that point up to current price. So if I would have launched this bot with a trailing up on, then imagine what would be the return. Like, it would be not just 24%, I guess it would be around 120 or something like that. So always make sure that if you want to let the system automatically follow the market rally, in case if it happens like when you are not on your watch, then make sure to switch the trailing up instrument on. Okay, basically, like, to be honest, I always make sure that I have it on, because of course I want the system to automatically follow the market rally, so that's why I always have this instrument on. But it's really up to you, because it can be that you'd rather prefer to cancel the bot and then launch a new one with the new trading range, with a newer stop loss. So it's really up to you. Okay, so far that's what we have. We also have the spot history. Like, here you can see the results of your closed bots. You see they are closed. So this is what was the investment change right at the time when I closed the bot. So when was the last trade made here? Actually, I don't see it. Okay. Well, so anyway, you can use the spot history to analyze your past trades. You can look at the profit generated on a daily basis. So this gives you an overview of what was the return on a daily basis based on the trading configurations that you had at that time. So it turns out that when you had 400 USDT investment with a grid spacing of 0.75, which was actually, where is that, 33 grid levels in total, then on average, you see, if you move it to the left side, you would see that on average it was somewhere around $4, like the average. Actually, it would be a biased estimation to say, because it really changed with time. So it's not $4. So at least on a weekly basis, you can see what was the daily performance. And we will actually add this feature of like the metric over here that will display you the average daily return generated on this board, which would give you a better overview on what is the average, what is the expectation you can build on this based on the past return. So let's say the average bot return, like the average daily return is, let's say, $4. So knowing that, you know that if you will launch a new bot with the same investment, with the same grid spacing and the same grid amount as you had, in this case it was 33 grid levels, then at least you can expect that somewhere around $4 is that what you can expect from this crypto. But of course it's never guaranteed because the volatility changes with time. So it can be that back in past, like when you had this active bot active, sorry, this strategy active, then the volatility was completely different story compared with today's realities. But at least you can use these past metrics, like this statistical information, to build your expectations for future bots. Okay, so you can analyze your winners and you can analyze your losers. And of course here I have some losers. Let's just change the date range and let's see. Yeah, so you see I have some losers here as well. So I can just go one by one. I would open the chart to see when exactly I launched this strategy, what was the volatility, what was the market phase. So I would take a sharp look at what was the market phase back at that time and what was the daily return, like the average return for this strategy that I said, and what was the main mistake that I made, because you see the result is minus 18%. So what was the primary driver back at that time that led to this loss of minus 18%? Okay, so all information here, you have it at your disposal, even like the amount of buys and sell orders executed and the price at which it executed these trades back at that time. So you have everything at your disposal. You can actually export this data to Excel file to make other calculations, like maybe the Sharpe ratio. If you are the portfolio manager, you can also calculate the like other metrics, like maybe the Sortino ratio. So it's clearly up to you what you can do with this data. It's just that it's so easy to extract this data, which is something that only Bitsgap has as of today. Such a impressive visualization of the data and past outcomes that you can analyze to find your losers and winners, so that next time you launch new bots, you will know exactly what is the best configuration for a certain cryptocurrency that you used to trade, and basically what is the list of cryptocurrencies that you would rather stick to trading with automated bots. Okay, even if you, by the way, don't know which crypto to trade, here if you scroll down you see recommended strategies, and these are top performers based on monthly backtest results. So you see the coin, which is the name of which is Caucus. It made 64%, and that means that the bot managed to make 64% for the period of 1 month. If you look at the Doji coin, it just made 50%. If you change the backtest to weekly basis, then you see that in this case the top performer is Doji and then S&M. Okay, so it doesn't mean that it will repeat the same result in the next week. It's just that at least this provides you an overview that this coin is an interesting one for the market, and that there is enough volatility, because otherwise if there wouldn't be enough volatility and liquidity on this coin, the bot simply wouldn't have managed to make such a decent return during this period of time. Okay, so use this uh, sidebar tool to look for trade ideas. if you don't know which crypto to trade. The cool thing that we also have here is the backtest. And the backtest basically allows you to stress test any configuration. So let's say you want to backtest the SBot on AGI trading to Bitcoin. And let's say 103 grid levels. You click on backtest and here we go. You see that for the period of okay, that's actually a mistake. It's not 3 days, it's actually 1 month almost. But let's maybe change it to 28th of January. Yeah, so you see for that period it would have made 4%, 4.82%. Okay. Let's change the trading range. Let's backtest it once again. So you see, I just changed the trading range and now you have all the metrics, you see. So you can backtest not only the trading setup with grid levels, but you can also backtest it having a different trading range in this case. So that's the point of backtesting, that you can see what would be the exact return if you would have launched the bot on this crypto 7 days ago. So that's the point. And you can compare this strategy with another one. Let's say classic bot on the same crypto, same amount of grid levels. Let's backtest it. And yeah, trading range is fine. Okay, so why is that lagging now? Okay, let's refresh the page. It just, for some reason, it does not respond when I click on backtest. Let's use once again AGI Bitcoin. Now classic bot. Okay, the trading range is fine. 107 grid levels. Backtest. And let's use the same date range as the one we used. Okay, so for some reason it does not respond, so I don't want to waste your time, guys. I apologize for this issue, which is currently arising from the backtest mode here. I don't know why. Well, anyway, the idea is here that you can use the backtest to stress test any strategy before actually trading it. All right. So that's the cool thing, and most importantly, as you have the demo mode here, like the one I'm using right now, so all you see here is basically all the trades that I have on my virtual money. So that's another cool thing, that having both the demo mode, which is a risk-free trading simulation in this case, and having a backtest. This is like the best formula you can get on the market to prepare yourself, like to discover better strategies, to develop new ones. That's like the best set of tools that you can have, absolutely risk free, to find your winners before risking your real money. Let's see what strategies that you can use based on the bot that you selected. So let's say for SBot, we know that we should launch SBot on the accumulation and distribution phases. The question is how to spot this phase. So here's the strategy number 1. That's the pattern that you see over here. So when you see the price bounces off the horizontal support line and reverts from the resistance, it becomes pretty apparent that you've spotted this pattern over here. And the configuration that you can use here is exactly this one. So I would recommend, basically that's from my personal experience, it's not a financial advice or anything like that, it's just that from my observations and practical experience, it makes more sense to wait for the price to bounce off the support, not just to touch the support, right, and enter like the market instantly at that point over here. It would make sense to wait for the price to bounce off as a sort of confirmation that the support line sustain. And that's why I would have launched the bot with this configuration at this exact point of time. And of course, you set your stop loss below the trading range. So that's the strategy number one that you can use for the SBot. Another one that you can use is in case if you expect the market to rally. And why would you expect it to happen? For example, you spotted this pattern. So you see, in this case, that's the angled up resistance and an angled up support line. You see pretty much the same as in case of the horizontal resistance and support lines. You see price supports, it respects the support and the resistance lines because it bounces off the support and reverts from the resistance. So this is a kind of an indication for us that the market now is in a rally and we can participate in this rally next time we find the best price to enter. And you see, successful bounce off. Now we can enter this rally with the classic bot. And here's the configuration that you can set. And of course, you set your stop loss before the support line, because if the price breaks the support line, most likely it will continue the downfall next, like down to the next key support level. So this is something that you don't want to happen, and that's why you limit the risk with a stop loss order over here. So you see all of the configurations that I provide you with, they have minimum risk exposure to the market, because you see the stop loss is pretty close to your entry price in this example and in the previous that I had for you. So it's not the only pattern that you can recognize on the market. There are actually around 40 patterns that exist on the market. For example, let me show you my real trade. Let's just switch to the real account. You see I have Litecoin trading to USDT. And for this one, I use the SBot strategy because I expected the market to continue the sideways for a while. But in reality, it turned out that it actually breached the resistance line. So that was the pattern formation that I spotted right over here. So you see, sellers were pushing the price down, but buyers were also strong enough to sustain this support line. And once you see the breach of the resistance, this can be like an indicator that the price may continue the rally. So that's why I launched the bot, even though I expected the market to move sideways a bit, which is like this, but I still anticipated that it might go even higher, and that's why I had my trailing up on. And that's my current result so far. So for 4 days, it has already made 4% to my initial investment, which is a pretty decent return that you can get just for 4 days, apparently. Initially, my stop loss below the support line, and now you see that I drag it to that point. So that's the way of how you can trade, okay? That's the real trade that I have, just to show you that I'm all of the examples that I provide you with, they are from my real trades and based on my experience and observations on the market. To learn more about other patterns, just go to the Bitsgap main page and go to about, then blog, and here you have the section called trading bot and analytics, where you can find other strategies. Let's say over here, and you will find other strategies that I prepared for you. So these are exact configurations that you can use. Okay, so everything is explained here, crystal clear, should be no questions. So if you are like a beginner, or at least you have some experience, then this can be very useful for you to try yourself on automated trading, to find your best trading setup. Even if you are a very experienced trader, then still this is something that you can try if you haven't tried it before, and you will see the results for you. It just depends on various conditions on the market. For example, this pattern that you see over here, it can work not for all cryptocurrencies. What you have to do here is just take this strategy and try it out on various cryptocurrencies and find out which was the best one for you. Like on which cryptocurrencies this pattern has proven to be legit. Like how many times it was successful and how many times it did actually fail. Okay, you can actually visually do this, like just open the chart, spot these patterns, like for example you see over here, you see it breached the resistance line. So this is something that I can call a successful pattern outcome. So look for these past cases on the crypto of your choice and just compare these cryptocurrencies and select the one where the pattern works the best way. Like most of the times it works out as in the direction as it should be. Okay, so that's the point. So many ways to find best sell and buy opportunities on the market using these patterns and other technical instruments, like for example indicators that show you the overbought and oversold conditions on the market. So there are many ways to use it. And the cool thing is, once again, that here we have the demo mode and the backtest tool for you to discover and develop on trading strategies before risking real money. So just go for it, okay? No rush, no need to risk your real money. Just try demo mode, and in the demo mode you will find out that you have many ways to enter the market. You just need to find the right one for you, okay? So that's basically it for today. Let's see if we have interesting questions unanswered. Okay, so there is a question if the price moves downwards, even though you expected the price to rally. So for this one, I actually have the answer, and it should be somewhere around this area. Yeah, so here it is. So that's the example. You see where I have this phrase HODL and the arrow pointing at the price. So imagine that this is the exact time and price where you purchased quantum cryptocurrency. Okay, and you just had this quantum in your portfolio now, and you expect the quantum to appreciate in the future so that you make some returns, right? But instead the price falls, and now down to the current price, as you see here on the chart, you are down by minus 6.88%. Okay, so that's why, basically, why minus 6.88%, because that's the difference between your buy price and the current price. Okay, so that's the return. Well, actually, that's the loss that you get if you just simply follow an ordinary HODL strategy. Okay, but when you launch the bot at Bitsgap using either the SBot or the classic bot, you will find out that if you would have launched it at the same price and date instead of the HODL, then down to current price, you would not be down by 6%. You would only be down by 3%. And that's due to the fact that during this downfall, you see all of these trades made by the bot. So this is like the price action that you see here is when the bot managed to make some micro gains for you, and that's exactly 2.33%. In terms of USDT, that's 23 USDT actually. So this return generated by the bot on this downfall, it did offset the negative value change. So instead of minus 6.88, you have only minus 3%. Okay, and that basically also due to the dollar cost average effect, because we see we have this equal investment distribution. So that means that we never buy the whole stake in crypto. Like we never enter the market, in this case by 100% at one price. Instead, you have the investment distribution, and it means that if the price falls, then it just starts buying more at a lower price. And that means that your entry price changes respectively, and in any case, you end up with this dollar cost average effect of having a better entry price to the market. And that's why you see here the result is minus 3%. So that's an obvious, like an apparent example where you see that it makes more sense to stick to the automation, because even on the downfall, it protects your investment. And in this example, it did actually protect it twice more effectively. You see, that's minus 3% instead of having minus 6%. Okay, so it minimizes your losses in case of the market falls, apparently. And if you are using the stop loss, like all of the instruments that we have at Bitsgap, then you have your risk under control by 100%. So not only automatically the system minimizes the loss, but you have the stop loss to have a full control over your investment. Okay, so what we learned today is that, first of all, you must define the market phase: accumulation, advancing, distribution, and declining. You want to launch the bot only on the accumulation, advancing, and distribution. You don't want to launch them on declining, because it makes no sense to let your investment depreciate, right? So once you decided, I mean, once you found out what is the current market phase, and you can do this using the patterns that I provided you with, which can tell you if the market is in a rally or it's in the sideways market formation. The next step for you to do is to enter the market with the right configuration, and that's over here actually. See, examples all provided. And yeah, just follow the guideline. And here's the guideline once again. Select crypto, select the trading range based on the market phase, select the grid amount, based on the cryptocurrency's volatility. So if the volatility is pretty like pretty severe enough, then having less than 60 grid levels makes sense. If the volatility is low, then having more than 60 grid levels makes sense in this case. Select your investment and make sure you use all of the tools that we have, like the stop loss, trailing up, so everything here at your disposal. Okay, so to learn once again more about automated strategies and various ready-made configurations, just go to the blog, and here we go. You can also find guide videos on YouTube that we have, and the link is provided in the webcast's description actually, so you can also go there and check out. So far, that's basically it for today once again. So thanks a lot for your attention. Uh, on the next webcast, we will cover, like, I will explain more about the bot profit, the investment change, the statuses, and